Great stuff. Let's get started. Welcome to all our guests to our third webinar. This time we're focused on giving you an insight into finding and navigating the options in the UK market for those seeking funding solutions for payroll and invoicing. We're just going to mute all other guests at the moment, just so that we can get through the agenda, cover the ground without any interruption here. But there's going to be plenty of chance for questions today. So if we can't answer them through the presentation, please feel free to store them up, and there's no need for furious note-taking either. We're going to share this deck post the webinar. Should be no more than around 30 minutes, so we'll crack straight on with it. Let's look at the agenda today. So some introductions shortly, but the key reasons we're here is firstly, why choose an outsourced partner? What are the benefits effectively of doing so, not only to you as a founder, your business, but obviously we'll look at some of the reasons for that, and then also look at some of the market providers. There are three key differences and different providers, I should say, in the market, which ultimately we need to explore for you to make the right choices. And then we've got to have a look at actually how do you make those choices once you're looking at a particular provider, how to make it best work for your business. And so just quickly on to our introductions. Firstly, my name's Alex Niarchos. I'm the Investment Director here at Recruitment Entrepreneur. We are responsible for funding and mentorship and guidance and support effectively to scale businesses for an exit. We've also got a new service that looks actually in similar ways to this topic in terms of outsourcing provisions of infrastructure to set up a recruitment business without capital funding, but also without any equity giveaway. So we'll look at some of that later on. But without further ado, I'd like to introduce you to our expert today, Yves Bizimana, MD at Workr Solutions and Easypay. Welcome, and thanks for giving your time up. Do you want to give us an overview of your business and your position?
Thank you, Alex. Could we mute everybody, please?
Yeah.
Thank you. Yeah, thanks for that lovely introduction, Alex. Happy to be here. I'm the MD of Workr Solutions and Easypay, which are subsidiaries of Workr Group. I like to think of Workr Group as a Selfridges of recruitment agencies, really. We provide everything that a recruitment agency would need apart from really helping its staff for its end clients. So if you needed to pay temps, be that umbrella, CIS, PSC accounting, our Workr Group does that, and we do that both in the UK and internationally. And what Workr Solutions and Easypay does for those businesses, which are the two businesses I run, is then to support back offices for recruitment agencies. And again, like we do in our business, we like to tailor things. So Easypay is tailored to startup businesses going through some growth. And then Workr Solutions is tailored for businesses that are established right through to big groups like Recruitment Entrepreneur that we would be looking after and having as partners.
Excellent. Excellent. Well, let's look at and dive straight into the topic today. If we look at why choose an outsourced provider, I mean, you've obviously spoken to many businesses that have done that. What are the benefits? Talk us through what your view on this is.
I think historically people have gone up to outsourcing for cost, right? So outsourcing has a bad connotation in terms of its cost reduction, it's people losing their jobs. But actually in the space we're talking about, outsourcing is a strategic option, because what outsourcing does for you, especially as a startup or a new business, is to save you time. So time is an opportunity cost, as we all know. It's going to give you that time to actually go out and recruit and get on with the business that you've started, as opposed to wasting time on typing out invoices, on trying to work out who's paid and who isn't paid and who owes you money. So I think for me, the biggest thing about outsourcing is actually giving you that time back. If you choose the right outsourcer, you're going to get that time back. If you choose the wrong outsourcer, unfortunately, you probably might end up spending double the time you would have if you're doing it yourself. So selection is important, but if you definitely choose the right one, then I think time is the biggest asset that you're getting out of outsourcing if you choose it right. Cost, though, is also another element that's important. And certainly when you're starting up, or even when you're an established business, cost is a key thing. So good outsourcing should always reduce your cost. We then talk about connected expertise. And I think the key thing there, and we are very big about this in the Workr group, because we have very many different businesses, from compliance to international payments, and we want to see that there's a connected line going through all of this to make sure that the agency gets the best support. So when you go to an outsourcer, what you should have is that you get expertise. You don't have to worry about, am I paying an umbrella worker? Am I paying a PAYE worker? You don't have to worry about, how am I collecting my cash? If you had to fill all those roles properly, it's going to cost you money. So not only are you saving cost in terms of actually getting the right expertise, but you also save cost in terms of compliance because of the expertise you have. So if you're looking at accounting, for example, if you didn't submit your VAT return on time, you're going to get a fine. It saves you that. If you're having an audit and you're having issues, you're going to have to work out what exactly is people are looking for. Again, outsourcing saves you that. So that connected expertise in that process is really valuable in terms of saving you time, but most importantly in the future, saving you costs that are probably unforeseen when you start, but can become pretty big. And you talked about exit value there, Alex, very important in terms of compliance. So if you have a business that has many holes in it, that can definitely affect your value in the future. So that is a very, very helpful piece that you should get from the proper outsourcer. Systems is another area. Most people don't know, but if you're in recruitment and you definitely have temps, you must have a pay and bill system in the middle. I find in consulting with many businesses that a lot of them will probably have a CRM. So that's where you have your candidates in the front end, and they will have an accounting system. So for example, like Sage or Xero, but they don't have anything in the middle. Now, when the business starts to grow, that becomes complicated in terms of invoicing, payrolling, and you wouldn't know that because you don't have that expertise. You're a recruiter, and being a recruiter, you're going to focus on recruitment. Having that knowledge and having that expertise, and then having that system all included in the pricing and what you're getting is really, really important. Now, all that leads me to cash flow. As a business, none of us can survive if we don't have money to run the business. We need to pay the temps, we need to pay our staff, we need to pay for the things that we need in the business, right? So cash flow is critical, and how cash flow is affected, especially for new businesses, and a lot of them do overtrade. So actually they have a good business, they could be trading really well, but the situation is that if you don't have the proper outsourcer in terms of funding, and we'll talk about what types they are, then that is going to affect your business. So really, if you need funding, think about which kind of outsourcing provider that does the funding as well, and that can be really helpful as well. Credit risk is another area to think about when you're choosing. So you might go to somebody where they don't really provide credit insurance, and they need you to go somewhere else. So again, having your pricing including credit insurance can be useful, because you're not trying to think of too many things, especially if you're new to this area. That's not something you want to risk. We all know insurance is a headache to pay for, but we know how useful it is when things go bad. So very, very important things to consider there.
Okay, so just give just a couple more minutes on, you're talking about obviously needing other insurances here. Yves, you obviously as a business provide that within that offer. What?
I think the best example to give is to look at different industries, right? So if you're supplying into public sector, right? So government is your end client, really. You can always be sure that that money is good for what it's for. As long as that timesheet is valid, you will get paid. Unlikely that they're going to go bust. So insurance in that case is not going to be critical. But if you're supplying into the private sector, say construction, and you're supplying to what looks like a good client, they're taking many temps from you, we all know that they can fall tomorrow. If that happens and you've got a client owing you 30 grand and you're a pretty new company, that could sink you, because you have no recourse to get those funds back once that company disappears. However, if you're insured, like in our case, for example, with our Easypay service, we will always insure the debt. In that case, we can claim on the insurance for you so that you are not at that risk.
Excellent. good comfort to know. Okay. And I guess, you know, we don't have many finance directors setting up recruitment businesses these days, Yves. What, I mean, in terms of systems and I guess having the ability for a founder to interact with this outsourced provider and see, you know, ultimately, I guess the ins and outs. I mean, what's the importance of having some infrastructure in terms of IT or systems in the middle here for the founder?
If we had an FD on here, and the right founder will grow to need an FD eventually, I'm sure, because your business does grow and have different needs of people. They'll probably tell you that the ease of reporting is critical to understanding how your business is performing. Having the right systems in place means you're not dependent on manipulation of information everywhere, which never seems to reconcile back. So the common problem there, Alex, is I'll go to a business and they will look into their CRM and it's telling them they've done gross profit of X amount. They will then look into their accounting system and it's telling them a different value. Yeah. So business owners saying, well, how much have we made? You know, whose guess is it of how much we've made? Should we take what the CRM is saying or should we take what the accounting system is saying? Now, in most cases, you take what the accounting system is saying, but guess who you upset? It's all the salespeople because they think they've done a different value. So having the right systems avoids those situations.
Yeah, certainly. Okay, thank you. So should we look at effectively, I mean, it's, you know, having been down this road myself, it can be often quite confusing when you first look into this type of support. And you're right, the market has different providers. Do you want to just walk us through the differences here?
We probably need an hour for this one, but I'll try to...
Top line.
Top line. So when I think we're going to exclude you have your own money to start the business, or you have somebody to take some equity in the business, put some money in. So let's exclude those. What we're looking at here is you want to go out and borrow money against your invoices. So that generally is called invoice discounting or factoring. So you're getting money from a bank or an asset-backed finance provider. So not necessarily a consumer bank, but they're very much under FCA control as well. So in that case, what's happening, you have assigned your debt to these providers. So let's assume that's a bank, and they will have an assignment of debt on your invoice. That's saying that they've actually, through contract with yourself at the start, own that. They will now own that debt. So then you have a right to draw down some money against that invoice you generate every week, whether that be perm or temp, depending on what you've agreed. So that generally tends to be around 80%. So that means you generate an invoice of £1,000, you can draw down 80% of that £1,000. And then you can take that money to pay your temps and to run your business. So as you can see, you don't have to wait for your client to actually pay you, which in most cases we know is going to be anything from 30 days to some cases where I see even 120 days, right? So hopefully you're not that business doing 120 days, but certainly 30 days of waiting. And we all know that not everybody pays bang on 30 days. So that means if you don't have that facility, you're waiting for 45 days for your money. This is why this becomes a very helpful way to run recruitment businesses if you don't have money sitting there that is going to help you run your business over the next 6 to 12 months without need for a facility like this. So there are two types of these. There's invoice discounting and there's factoring. And why is it important to understand the difference? Because most people don't. Factoring means that the provider, this bank, is managing the credit control for you. Okay? So that means when you generate your invoices and put them in their system, they're going to see the invoices and they'll probably ask you for copies for audit purposes, right? But what they will then do is allow you to draw money against those invoices, and then they will collect that money, right? But because they tend to be big, they're going to have many clients. And what will happen is they will work on your ledger maybe every 2 weeks. What does that mean for your collections? Your collections are going to be slow, right? So we have what we call debtor days, right? So your debtor days should generally reflect your payment terms. So if you're on payment terms of 30 days, your debtor days should be around 30, 32 if your debtors are being managed well in terms of credit collections. But in this case, chances are you're going to find your debtor days 45 or even worse, okay? Which means your cash is staying out longer, which means this provider is charging you more because they charge you based on how long that cash is out. Okay, so that's factoring for you, and that's really quite important in what does it cost me, okay, and what does it mean to my cash flow eventually. Okay, so really important when you think about factoring. Unfortunately, if you go to one of those providers, factoring tends to be what's available to smaller businesses. It's very unlikely that you're going to get an invoice discounting facility immediately when you're just a startup. So you're going to get factoring. When you grow up a bit and they understand that, you know, you can manage everything, you can apply to that bank to move on to an invoice discounting facility. What that will do for you is now allow you to actually have your own credit control. But here's the catch. Because they were doing the credit control for you, chances are you don't have what we call your own sales ledger. You're not maintaining your invoicing yourself and the collections. So moving on from a factoring to an invoice discounting, and I deal with big agencies in this case that can't do it because they don't have this, you will need your own system to actually say, this is my sales ledger, this is the balance, it matches to the bank, and now I want to move away. So you're always caught into that factoring trap for quite a long time until you find people like ourselves who can actually help you set up your own sales ledger internally so that you can move away from the bank into another solution. Now, if you move into invoice discounting, what's the difference? It means you have your own credit control. So the bank is still providing you money. You're still drawing down on that money, but now you have your own credit control in-house and you're actually chasing your debtors yourself. A much better place to be than somebody else doing it for you, and you can't really see how good they are or how well they're doing it because they're handling it and you're just drawing the cash. So when you're new to this space, that's not something you really understand until you start to grow and you're looking at your charges and going, what is going on here? Okay, so really good to be aware of those. What's the third option? That's what we tend to call in the market 100% payroll funding. So in that case, and that's what our Easypay business does, we will not give you money to draw down, but we will pay your temps for you. If you remember, the reason you're drawing the money down is to pay the temps. So actually what we're doing for you in this case as Easypay is to pay those temps for you so that you don't have to worry about it. We'll pay the temps, but what else are you interested in is the margin you've made. So we will pay your margin as well to you in the same week. That means what you're actually working for, you have right there and then that week, which is your margin, and you don't have to worry about your temps because we've paid them. Like the bank, you will assign the debt to us in contract and we will chase the debt for you. But this is the big difference. We have to chase that debt pretty quickly because of the risk we've taken in paying your temps. And that's I think the big variation in terms of if you ever, I'd probably bet on it, but if you could ever compare all the ledgers from a provider like ourselves to a provider like the other one, you'll probably find that the debtor days sitting with us is much, much lower because of the way we manage the credit risk, because it's so important to us by the virtue of what we're doing in terms of paying your temps directly. What that means for you is that you have one charge, which is 1% fee that we charge on paying those temps. In the other format, you have two charges. You have a charge for funds in use, and you have a charge for service fee. So again, a bit more complicated to understand. But I think the thing you want to take away from it, you will keep getting charged for as long as that money is outstanding. So imagine if the credit control is not very good and the money's outstanding for months, you continue to be charged. In the format of 100% payroll funding like Easypay does, you get charged once that week and that's it. So very, very different and very important to understand the difference. Now we've put principal versus agency, a bit more complex, Alex. I'm not sure, it probably will need a bit more time, but I think the difference is only relevant really to especially construction companies, or rather construction recruitment agencies, that if we were operating in a principal model and you were a business supplying under CIS, so that's construction, so I won't spend too much time on it because it's not relevant to everybody. That means you could supply it through us directly, and you won't have to worry about CIS registration and gross status. Okay, so if you're not in that space, not so important. I can pick up on that for whoever it's important for in Q&A. But it really is saying that us as Easypay, the provider of that 100% payroll financing, we're either principal to the contract. So in that case, we're working directly with the client, or like in the majority of cases, we're agency and you're the principal to the contract with the end client.
Very good.
Quite a lot there. So
no, I think that, look, it's a really good overview. It was, not only interesting, but I think it's made, for me in my mind, certainly some clarity around the differences, and I guess maybe some immediate decisions from that. So I guess from that point then, Yves, I mean, if you, once you've made the decision about the type of provider, how do you make the right choice of the, I guess, the many providers within just that space? So what is there to look for, and how can they, as founders, make it work for the needs that they have? What are the things to look out for?
So kind of try to list a few things there really that play in the decision, but it really does depend on each business and I suppose each owner of the business. So, first question, are you doing perm or temp, or are you doing both, right? Generally, if you're doing temp, it's good to have a funding facility. So if you get a funding facility in the ones that we've discussed, there is some sort of back office attached to it. So you think about factoring, there's a credit control function attached to it, albeit questionable how good it is, but there is a credit control. So you will have to do all your payrolling and all your invoicing yourself. Same with an invoice discounting, that in that case, actually, when you generate, in invoice discounting, all you're getting is funding. Okay, so you will have to have your own back office. You have to think about, do I have the ability to run my own back office? And then when you think of the 100% financing, it has all that done for you. So it's the nature of the charging. Now, going back to what we are as Workr Group, is we try to cater for different businesses. So Workr Solutions acquired Easypay for one reason. It was a good business that looks after startups and has a very good reputation with them. So in that case, when you look at what we are as Workr Solutions, we'll look after established businesses and create that platform for established businesses. Those are businesses with their own invoice discounting facility, and we will then help them manage that facility. So that means they draw down their money, but all the work is done by us. But they will draw down the money and decide to pay the temps themselves. So it's all tailored around them. However, with the Easypay model, that means you don't have to worry about any of that, because you don't want to have that nature of control. What you're interested in is growing very quickly and having somebody look after all of that. When you do grow up and you want a bit more control, you can then move into the Workr Solutions model, which gives you that control where you're the one drawing down the cash. So we've kind of catered for that growth spectrum of agencies. What you want to think about is, how complicated is my business? If, for example, you're in healthcare, you're going to have multiple timesheets a week, or if you're in hospitality, that's pretty difficult to manage. I have seen recruiters who think, I'll do it for myself up to 50 temps. I can almost guarantee you're going to have so many problems by the time you get to 25 temps, right? Even 15 temps, because to manage all those timesheets and generate those invoices correctly is going to be a nightmare. So what is the temptation that comes to most? Is they get a clerk to come in who has no experience or some little experience, maybe was doing compliance or something like that, and they take over this job. But the other job they will take over is collecting cash. And what do you find, Alex, is lots of problems thereafter. Cash is not coming in, the reporting is not working right, they don't know exactly how much they're making. So I'd say, as long as you have temps, and as long as you don't have the expertise, so if one of your partners is coming from a back office and they've run a back office and they understand it, I would get it if you don't want to go out to an outsourcer. But if you don't have that, it might look expensive to you, but in the long run, it's the cheapest way to start to look after that back-end piece and not have the headaches that come with it later on. Market debt risk, we talk about there. I mentioned public sector and private sector. So again, if you're collecting money in the public sector, it's not going to go bad, but we all know how difficult it is to collect money from different areas of the public sector. If you don't have experienced credit controllers in that area, your money is going to be outstanding. Not to mention, it's full of master vending, right? So where master vending kicks in, not understanding how those contracts work and what kind of challenges they give you and how to get the information to pay your temps and indeed reconcile exactly how much you're making from them can become very difficult. So again, is your business in that sector? Because if it is, it's going to be complex. If on the other hand, you're in technology and you're doing temps who are doing daily rates, you might argue, well, maybe I can get to 5 or 10. And on that case, I might forgive you to think that. But again, if it starts getting complicated, purchase orders start kicking in, and all that rigor with reference to debt collection, that then becomes complicated. And if you have an invoice discounting or factoring provision, why not think of getting the back office instead? Because actually, the other one gives you more in terms of service. I've put something in there that might be not so clear, but if you're an existing business and you're thinking, oh, I'm with this provider, but they're not working very well. What we find, Alex, is that people get stuck where they are. It's a bit like your utility provider. You don't like them, but you just, or your insurance for your car, but you just never really get a move on to change them, right? Because you think it's too difficult, it's too complicated. Actually, it isn't, because once you start speaking to the right people, finding out and understanding what it is you don't like, I think what you need to think about in this case, if you're already established and with another provider, is if I move, what complexities am I going to get? Number one is, do I have the credit limits I need? So somebody might tell you, this is great, come to us, and you go to them, and you've had an account that has insurance of 50,000 in terms of limits, and now you're going to somewhere where you're just going to have 15,000 pounds. So that means that's going to limit your trade, and that's going to be a nightmare. Or again, in the case of you're doing international business, or you're trying to do international business, as we have had some clients move to us because of that reason, that they are with a provider that can't fund that kind of business. So again, understanding what it is that you don't want, or what is it that's giving you complications, go somewhere else and make sure you check that those things will not be hindrances when you move over. End-to-end business process is really saying, think about where you are. I think we've come across a lot of clients where they thought, again, going back to the beginning, we said, if you outsource, it should save you time, right? And they find they're spending a lot more time than they expected. And that's because the service is not very good. The whole thing is not linking up very well. So in that case, that can be the wrong outsourcer for you. If you're going to move into an outsourcing provider, then your business should find that it's spending a lot more time on recruiting and very little or no time on what we call back office related administration. Nature of fees is a key one. I talked about the discount fee and the service fee when you're factoring. So most people look at that and they think, oh, just 0.2%, great, compared to this other one, which is 3%, right? But actually, that's not the full picture. You need to understand there is that. And by the way, it's always above the base rate as well. So always think about that and understand, right, how does that then, if I calculate that, plus my back office person, because that's just going to be invoice discounting, isn't it, or factoring, plus my back office person, it's equal to this. Versus I go to Easypay, where I don't have to think about any of that. It's just one fee. How does that compare? That means you're making a very informed decision as to who you're choosing.
Superb. I think, look, the other thing there to reiterate is you can't really cost up your time saved. It's a
100
factor. We speak to a lot of founders that, you know, ultimately in the start of any business, they're wearing multiple hats of responsibility. So, you know, being an expert at all of them isn't necessarily the way you should move it forward, or often is the reason why people don't scale. So really insightful here, Yves. Well, look, I think, you know, great timing on where we're at. Let's just close off on the final slide and look at some, look at getting some questions from the audience here. I think, just in terms of, I guess, the provision of outsource, I think one of the things that we've seen, and in partnership with you, Yves, is obviously the ability and the need in the market for people to see, I guess, the ease of how to set up a business in recruitment. And with that, not only can we outsource the functions that you've effectively talked about in partnership with you, but also through our service Reflex, we're also looking at how you actually outsource, to us in some respects, website creation, finance support, as you suggested. Not only that, but market leading CRM, licensing, job board access, all those basics that in many cases it stops people setting up front, but ultimately it can be done actually through no equity in a service called Reflex. So I think it's probably not known to everybody in the market, particularly those that are sitting still in employment, that actually it can be very easy to set up a recruitment business with the right people around you, which is exactly as you described. So
100%.
Yeah, anything further on Easypay there, Yves?
I think for me, what I'd say is if I'd probably be doing a disservice to the group if I even just talked about Easypay. I think, like, I went back to we are the Selfridges in recruitment, and I think if you think about it, if you did work through us from an Easypay perspective, the very reason we are linked up with RE is to ensure that we've got that spectrum that sees recruitment agencies go from startup right through to growth, right through to exit, working with yourselves, Alex. That gives that value to a recruitment business, and you don't need to be looking around about moving from place to place because of the way you're growing up. So we make sure that we don't create a one-fits-all kind of solution. Easypay is definitely the best catch for startup businesses. We'll look after them from contracts and terms of business, all the legalities around that area, to make sure that we make it as easy for you as possible. And we've got great people that are on the phone speaking to you when you need them, right through to established. Now your business is dealing with bigger problems in terms of integration, in terms of system requirements, and then obviously with our RE partners in terms of exit. So it's a really good combination and partnership in terms of what we offer with yourselves, Alex, to these businesses.
Yeah, thank you. I could have said that by myself. I think we all know how tough it can be in distractions. So look, thank you. Really, really good insight there. I hope everyone got something from that. Is there any questions before we close off from anyone in the audience? Might need to just wait for people to be unmuted. Anyone got a question for today?
I'll take a question from you, Alex.
Yeah, I've got several. I won't take too much time, but let's look at, once you've made your choice, Yves, what due diligence could a future founder of these services carry out to ensure they choose that right provider?
Sorry, say that again?
What's the due diligence a founder could carry out? So let's just say they're talking to 2 or 3 options. They've made their decision about the type of provider. What really should they be looking into? Because it can, as I said, from the start, be quite confusing. How do you make sure you pick the right partner?
Yeah. So I think understanding, there's 2 things. There's obviously the cost of whatever you're choosing. So understanding how that cost is made up of is really key, because again, I've seen business plans that have this cost in there broken down, and you get to 2 years later and you're wondering, wait a second, where's the profit? And it's because the cost of this provider has turned out to be pretty expensive, right? So there is the cost element. Definitely understand, like the way we said, how the invoice discounting cost works versus the easy to understand 100% finance kind of option, which is just a round percentage for everything. So cost is one, but then understand the service, right? What are they actually providing you? And if they're not providing you that, how are you going to deal with it, right? So systems is key. I think as a recruiter, all you want to worry about is what system am I using front end, whether that be a spreadsheet because I'm good at it and I've used it all the time, or that be a bullhorn an RDB or whatever system out there that you're going to be using. The back end is really, really key. And it's really, really key because it doesn't drive your business, but it can break it. So understanding who's going to do that for you, what systems, is important. If you don't have somebody you know and they're not partnering with you, then I think really thinking about an Easypay option can make a big difference going forward. I think the last thing really is about the nature of the market you're in. You know, what kind of risk you might have. That too will decide who you're choosing, because your insurances and limitation to how you can trade can massively cripple your business growth.
Yeah, very good. Anyone in the audience want to ask one before I do? We've got shy audience today, but look, I guess the last thing here is that, you know, there's also some responsibilities from the founder, Yves. You know, once I've made the choice or someone's made the choice to outsource, it's kind of, you know, pass it over to you, you know, off you go. But actually, what are the responsibilities of a founder or the team within that business or the individual to make this outsource provision really work for everyone?
Yeah. So one of the things we do have is obligations or service level agreements between the partners. I think really the requirement from we try to make sure we take as little of your time as possible, and at the start that goes through a consultancy process of understanding, onboarding process of understanding how things work. But what we do outline for you is what you need to do. Think of it as covenants of sort, and as long as you keep to that, so it's going to be in terms of, for example, you need a credit check, right? You need a credit check before you start trading. So we want to make sure, we want to protect you that client is good. We'll lay all those things down, and we don't make them too many for you to deal with, that they're going to create admin for you or hinder your business. But if you look at them, they're all there to protect you and us in terms of the trade you're doing.
Yeah, like I say, strong governance critical from both. Great. Okay. Well, look, Yves, thank you very, very much. That was some really deep insight there to obviously the topic. I think what we'll do is we'll close off now. We will share these slides with everyone who's been in attendance today. We'll show them interest, and you know, I think we've covered some great ground. So, Yves, thank you for your time.
It's a pleasure. Thank you all. Thank you very much.
Excellent. Thanks, everyone. Bye-bye.
Cheers. Thank you.